you have one more? One more person, or is that? Do you know where they are? Just waiting. Yeah. We're waiting for. Oh. Cool. All right, we're going to get started on our next panel as people start to filter in. For this session, we're talking all about threat intelligence, the inevitable cyber attack. Who doesn't love a good apocalyptic thriller? The thought of an inevitable cyber attack is something I'm sure keeps all of our security teams up at night, but our next panel are going to give us insight into the world of keeping us safe and threat intelligence. On this panel, we've got Tulan Sevgin from UpGuard, Gilbert Joseph from Palo Alto Networks, Agnes Tauk from Caleb and Brown, and our cybersecurity panel will be moderated by Sophie Bradshaw from Hamilton Locke. Welcome.
Thanks, Rachel. Good morning, everyone. Great to see everybody here in person in Melbourne. Before we kick things off, we're running a little bit behind schedule, so we might keep any questions to the end of the session. It's my pleasure to introduce our panel this morning. As Rachel said, we've got Tulan, who's a third-party risk management expert at UpGuard. We have Agnes Tauk, who's a cybersecurity expert at Cable and Brown, and will give us some particular insights on crypto brokerage, and Gilbert Joseph, who's a cybersecurity consultant at Palo Alto. As Rachel said, it's been quite a year for cybersecurity. Our news feeds are full of news about nation-sponsored attacks, the rise of ransomware globally and the effect that has on organisations, and then increased regulator scrutiny just to top it off, and a tightening cyber insurance market. So we thought to set the scene for our conversation today, we'd have our panel just give us a bit of an insight into the current cyber threat landscape, and why we need to understand this in order to have our cybersecurity risk management program in place. Gilbert, maybe we could start with you.
Thank you. Good morning, everybody. I think it's really critical for organisations these days to understand the cyber risk that they may be vulnerable to, and use that awareness and that information to feed back into the organisation to shape and also form the broader cybersecurity strategy. We live in a time of unprecedented cyber attacks, not only from the volumes of attacks that we're seeing, but also from the level of sophistications of threats. And as a result, we've seen an exponential increase in terms of cyber breaches over the last few years. The motivation behind some of those attacks would vary from an inexperienced hacker trying to extort personal information from a credit card that was purchased on the dark web, to a well-organised state-sponsored threat group that's aiming to destabilise the global financial market to further their political agenda. I guess the other thing to think about is the adversary themselves aren't always people. It's sometimes bots or machines that have been spun up to launch attack. So from a FinTech perspective, it's key to understand the cyber threat landscape. And as organisations continue to innovate, they need to be mindful of some of those threats that they could be up against so that they can safeguard the organisation.
Agnes, I'd be keen to hear from you, just to build on what Gilbert said. From your perspective, from a crypto company's perspective, what are the particular threats that you're seeing?
Yeah, well, it's not really different than any other organization that we would see, but the only difference that I have noticed is mainly their goal, which is financial profit. And this is why the fintech, and especially crypto, because it's new and it's emerging, and there hasn't been much security built there for everything that's new. You don't start off with security a lot of times. So that's where they find a weakness, that, oh, we don't have a lot of people working on security in crypto, so let's go and take advantage of that. And at the end of the day, their goal is financial profit, which makes it really a very targeted and a good space to be trying to cause any damage in. And yeah, just like any other company, same risks like phishing, employees being attacked, that kind of stuff is really kind of the same. It's just, yeah, they just take advantage of that weakness that a new space has.
Yeah, and I think, Chilin, we were talking about too, almost getting inside the mind of these threat actors to the extent that you
Yeah.
can, to the extent that they're people, and why is that important, and what role would intelligence play in that?
Yeah, of course. So I think intelligence plays a huge role. So being able to put yourself in that mind frame of how, your hackers and your attackers might, come in and make the most of your vulnerabilities. So, every company has cyber risk. You're never going to be able to not have cyber risk. We're not going to be able to eliminate it. But what you can do is reduce the impact of those attacks and also reduce your risk of those cyber attacks, right? So, and how you would do that is by understanding and knowing what's around you, understanding your threat actors, looking at who are the types of threat actors that would target your organization. How would they potentially do it? Having those workshops and talking to multiple people in your company, because I can guarantee that there's probably some people in your company who might know more about this than you, and who might even have some experience around what the threat actors may be. So it's always important to speak to various people in your organization. I think another key aspect is thinking about your supplier chain risk, your third parties. So I know a lot of fintechs like startups will use Google's and AWS and potentially other smaller startups as well for things like document management or even contract management and things like that. So looking at those companies and seeing what type of data are you sharing with them. Thinking about, okay, is that within our risk appetite? Is it okay they have access to that? When do they have access to that? What are they doing with it? Where is it stored? So thinking about all of those things as well, which then that will also open up your threat landscape, right? And your actors as well. So, thinking about those things and taking that into consideration, you'll reduce your cyber risk exponentially, I think.
Yeah, I think that's a really good point, isn't it? That your cybersecurity strategy needs to be a holistic one.
Yes.
It's not just buy a piece of technology or buy a particular service and you're done. Maybe again, we were talking about this morning. Maybe you could tell us a bit more about what a holistic cybersecurity plan or strategy would look like.
Yeah, sure. I guess we need to be mindful of that from a cybersecurity perspective. It's a combination of three key elements. It's people, processes, and technology. It's not about just a piece of hardware or a piece of software that's going to mitigate the threats within the environment, but it's also the processes and the people behind that that's going to drive the adoption of that technology. If we look at the FinTech industry more specifically, over the last few years, in 2021, for example, the biggest ransom that was paid was in excess of $40 million. Right? From a FinTech perspective, the average initial demand from a ransomware perspective is in excess of $7.6 million. And that's quite damaging for most organizations. Right? Being able to recover from such an incident could be devastating and long-lasting. So I think it's ensuring that we've got an intimate knowledge of that landscape and then ensuring that we can have the right processes and controls in place to drive the adoption of the technology to mitigate the risk.
Yeah, and I think the regulators are certainly making it clear that investing in cybersecurity is not an optional choice. But obviously, particularly for startups and growth companies where budgets might be tight, and you're looking to invest in your IT and information security. What tips would you have, or how do you go about, I guess, selling internally the value of both investing and also the risk and the cost that could come of not investing?
So I think there's a few things to think about here. It's easy to quantify the expense when it comes to purchasing the right level of controls or the right capabilities to mitigate certain risks. But we're often unable to quantify how much is it going to cost to the organization if we don't do something about it. This, leaving it to the status quo, it's certainly not a viable option. So it's ensuring then that we are approaching the, the day-to-day operations with a different mindset. If we think about the fintech industry, it's very much what Uber did for the transportation or what Airbnb did for hospitality. The fintech industry is always all around innovation, agility, and speed. So with that, with respect to providing services for its customers, fintech organizations need to then approach that service with security by design. We talk about the concept of zero trust, for example. Zero trust is a concept, it's a methodology that's been around for a number of years, and it's based on the premise that trust itself is a vulnerability that always gets exploited by the adversary. So there's no such thing as implicit trust within the organization. So as you're dealing with third-party lenders, providers, service providers, you need to be mindful of that digital interaction between your organization and the third-party organization. We talked about TPRM earlier on from a third-party risk management perspective. It's incorporating all those different elements into your day-to-day digital interaction so that you can secure the information effectively, whether that's on-prem or in the cloud.
Yeah, no, I completely agree with you, Gilbert. And I think you raise a good point there around, protecting the data and protecting who has access to it, whether it's digitally, physically, however it might be for you on the cloud or on-prem. I think it's important for a lot of companies, and especially when you are a startup and you're a smaller company, you can kind of take control of your data, right? You can think about what, your crown jewels are, which we spoke about last week when we got together, thinking about what is the most important asset to you in your company. So what is the most important data that you have? What is so valuable to you that if that was going to be taken advantage of, or if it was leaked out of your organization, how would that impact your company from a financial impact perspective, reputational impact perspective? Would you lose customers? Would you lose money? So, going that step back and actually looking at what are our crown jewels? What are we doing to protect those? Who has access to it? Where is it located? Thinking about all of those things can actually take you back that one step. And if you start doing that now, really early on, you'll, set yourself up for success when it comes to, when you grow and you're getting larger, and you'll have, more control over those jewels and understanding like, okay, what data is important now, because that will change over the years as you get bigger. And, going back to, the regulators in the financial industry, like they will love that. They will love that for you. Trust me. APRA will be all over your ass. Like, we love that. Like they harp on about, protecting your crown jewels, looking at your data, taking that step back. Who has access to it? How are you controlling it? They love that so much. So a lot of our APRA regulated customers kind of started struggling with thinking that way, especially when, some of the new prudential standards came out. So if you think about that, you're going to set yourself up for success.
And that's a good point, Jillian, because from a cyber risk perspective, it's not always protecting yourself from existing risk that we already know of. So as the organization is expanding, I mean, at this point in time, the last time I saw some of the data, there's over 30% of FinTech Australian companies who have already expanded their operations abroad. So it's understanding, what does that global landscape actually look like, and also from an innovation standpoint, being able to then understand that as the organization themselves grows its operation, it's been able to protect yourself against the unknown threats that we don't know about yet. And that's leveraging the right technology and the right data. We talked about the role of intelligence before, being able to leverage that information to give you insights as to what the attacker may be doing already inside your network.
I can definitely confirm on that from a startup point of view, because I started at Caleb and Brown and it was just not really a mature kind of a startup. And they tend, like all startups, tend to focus on growth and exposure and just getting new customers and getting revenue before even thinking of security. And it's more like a something that we can achieve later on. But the more you get exposure, the more you get risk, the more you get threat. So building that, so being ready for that is more important than just going in there and start growing and getting customers and being all over the place without really knowing what your threats are, and not just understanding what is valuable for you. You need to understand what is valuable for a hacker. What do they want from me? What would they try to, how would they try to damage or affect me in any way? And coming from an ethical hacking background, so I used to work more of an offensive security. I never cared about, what proactive measures I need to do. I just cared about like, oh, how can I attack this company? This kind of mindset, being in the shoes of a hacker kind of helps you understand where your biggest risks are, and not just from an insider point of view, more of an outsider point of view. You know how they say, to know your enemy, you need to become your enemy. Yeah, you need to understand what do they want, how will they try to attack me, what's my weakest point in their point of view, and start working on that early on.
Yeah.
Great advice. It's always easier to build it from the ground up, isn't it, rather than trying to bolt on, whether it's privacy by design or safety by design or security. Easier to do it from the beginning. And I'd be interested in the panel's view on, not just from a cybersecurity perspective, but also from a reputational perspective and keeping customers engaged and investors, if that's what you're doing. How can we promote that cybersecurity culture within our organisations?
Yeah, so I could take this one on. So I think to be able to promote it internally is obviously, doing the awareness training, talking to your staff, your team, educating them on what it is, what it means, because, you'd be surprised in so many organizations, large and small and mid-size, like a lot of them don't actually know what cyber risk is. They don't know, something that they might be doing every day, maybe opening up a risk for the whole company, right? And, if you think about it, a lot of our data breaches, most of them do occur from your front line of defense, which are your people who might be sending emails out, receiving things, opening attachments, like thinking about that kind of thing, like phishing and spear phishing, like they are some of the easiest targets for the attackers, and they just need one point of entry, one small point of entry, and they'll sit in your system for months, sometimes up to a year, depending exactly what they want from you, until they can make a more targeted attack and get access to things and then pull the data out. So, I think it's so important to educate your team, educate your organization on, not only cyber risk in general, you can also target it from a personal perspective too, because I think when people start applying that knowledge to their personal life, they'll also do it in their work life too. So, I've kind of taken that on with a lot of, the different customers I've worked with in the past, and it helps a lot. And some of them after the workshops would come up to me like, oh, I use this app, like what should I be doing? Do you think I should use it? How can I protect myself? And then how can I do that internally? Like, we see that a lot with a lot of the insurance customers too, where they're dealing with lots of files coming in and out of the company. So, I think you really need to just go down to the basics with them, talk to them, tell them, give them examples, do exercises, and, do it regularly. Don't just do it once off to tick the box exercise for compliance or whatever it might be. You want to be doing it regularly and stay on top of it, because your threat actors, your threat landscape is going to be changing almost daily.
And that's a good point. So with respect to the threat actors, I mean, there was a saying going around the last couple of years during the pandemic is never waste a good crisis, right? The threat actors are working 24/7. So from a mitigation standpoint, we need to ensure that we've got the right measures in place, the right capabilities and controls in place to mitigate those risks, right? And it's constantly evolving. The threat actors are always looking for innovative ways to bypass your traditional security defenses. So from a mitigation standpoint, we also need to leverage artificial intelligence and machine learning and all the innovative ideas to be able to counteract some of those measures that are put in place.
And one thing I've learned is the more secure you are, the more hackers are going to try to get creative and find other ways. So you will never reach a point where you're secure and you can just sleep like a baby at night. That doesn't happen. Yeah, because so the better you become at security, the better hackers are becoming. So as Dylan was saying, raising awareness for employees, making sure everything is going right internally is really important. But also hackers can find new ways, and you should always be prepared for that. Like they can control over them. You can't really train your clients, and they can do that. So you really need to also think, okay, what if my client is affected? I need to make sure I have the right measures in place. It's not just me, it's their security as well. I need to kind of take care of them, make sure that whatever service I'm providing for them does not get affected by them getting hacked. So it's like, yeah, you need to think of all kind of like scenarios, and that's where it gets like kind of, intense, I would say.
Not to scare everybody in the room too much. But I think that leads on to sort of the final point that we wanted to cover off and hopefully leave with some practical tips today in terms of, cybersecurity is not perfect. You will never guarantee that you won't have a cyber attack. And in fact, the topic of the conversation is the inevitable cyber attack. So I'd like to invite the panel to talk about when the inevitable does occur, how do we best respond, leaving aside, where I would get involved in terms of a reporting and legal perspective, but how do we respond in this, what is a crisis, and respond in a way that means we can recover?
That's a great point. So, from a response perspective, and it goes back, I think, to the people and processes conversation that we had earlier on. Being able to, number one, is to be aware of the threat actors within the environment, or at least potential damage that it could do to the environment. So, this is from a cyber readiness perspective. But after the breach, it's all around compromise assessment, risk assessment, maybe looking at your security operations or your day-to-day operations or your B2B transactions, how the data itself is flowing throughout the environment, and being able to really isolate and go back to the very first instant where the breach itself took place within the organization. Once you've got a detail or a thorough understanding of when the threat actually took place, you can then have the right measures in place to restore in the information. So.
Yeah, and this is really important, understanding where you went wrong and fixing it, and making sure you're back on track, recovering your backups and everything. But I also see this as like the easy part of a cyber attack. Like, this is something you can't control. The hard part would be regaining your customers' trust. They do understand that everyone gets hacked, but then they're going to become doubtful. Oh, do I really want to continue with that company? So here comes the biggest challenge, and how do I regain my customers' trust? And that would be basically just really showing them that we are working on fixing everything and we take security very seriously, and that can only be done by having security processes in place and having policies in place, and being compliant and all of that, and really communicating with their clients truthfully what the problem was and how we're fixing it and what we're doing to get back on track.
Yeah, I think you guys raised some great points there. And just to add to it, I think, looking at the incident, it's also always a good idea to have some sort of cyber insurance in place. So, obviously, depending on the type of data you're dealing with, how much data, and I guess how many people you have in your organization who would be able to take control of a crisis, because essentially you're managing a crisis at this point. Once an attack happens, who's looking after comms to the customers? How are you going to relay this to them? At what point are you going to relay it to them? How are you going to be writing these letters or emails, or is it phone calls? And that's where your cyber insurer, depending on what you're covered for and what level you're covered for, can definitely help you with that. So they usually have teams of people who can help you with writing up comms. They can have lawyers, like Sophie, who can help you with making sure that you're choosing the right vocabulary and you're not digging yourself into a deeper hole. You've got to make sure you stay on top of obviously isolating your environment. Then you have forensics as well, which is a separate whole thing. So, depending who you're also governed by. So, you've got in Australia the OAIC, where you have to report certain data breaches that happen. So who's doing that? Who's looking after that comms? So there is a whole lot that comes into play when you're thinking about crisis management. So I think, dealing with it once it happens is one thing where your cyber insurer can help you, or if you've got a lawyer who actually specializes in that. Otherwise, prepping yourself is so important, like having a crisis management plan, having a business continuity plan, because it's not just about, okay, what happens if you isolate your environment, then, doing your forensics on that data, and then how are you going to bring yourself back up, which was what Gilbert was saying. How are you going to do that? Is that in a phased kind of timeline, or are you doing it all at once? Have you tested it before? Do you even know if it's going to work? So like a lot of these questions, like organizations do struggle with, and, that's where the testing and doing that regularly, at least annually or twice a year, is very important. And that will help you become more comfortable with dealing with the crisis once it happens. But another thing that I think companies also forget about is, what about your physical assets? Protecting yourself physically, thinking about like, have you looked at, are your doors closing properly? Have you got people that can just walk into your office? Are you leaving laptops unlocked on the desk so that people can just see what you're working on? You're walking away from your desk, leaving your computer unlocked. So things like that, if you're printing stuff out, are you just leaving it at a printer? Are you working in a co-working space? How are you protecting your data there? So, thinking about all of that will also help you with preparing and being ready for when you need to jump into a crisis management mode. Sorry, I feel like that was a lot.
That was excellent. That was excellent. Preparation really is key, right? And it's not just having, sometimes I work with clients who have a data breach response plan, but they've never actually, had a tabletop exercise to see, well, if we need to be contacting these people, do we have their mobile phone numbers? How do we mobilise people in order to respond? And you're right, it's not just, the containment is key, but also how do we keep running our business when we're trying to investigate what's happening, and if we've still got these vulnerabilities and we're rolling back to a series of processes or technology that actually also has another vulnerability, and are we just perpetuating the issue? I think I can't see Rachel, but we might have time for questions if there's anyone who has any. One or two. There's a mic coming.
Thank you, guys. Very good. Thank you very much. Really informative. If cyber is traditionally regarded as an enterprise game, which I find it is, and SMEs and startups that are unsophisticated, don't have the budgets for cyber insurance and are trying to go it alone, MSPs aren't all equal, obviously. And how can a SME or a startup be confident in who they appoint as their MSP? Because obviously you're outsourcing a lot of that risk and requirements. Is there, the Essential 8 doesn't quite go into that depth. It goes very, basically. Is there ways in which we can advise, or is there resources, affordable resources without consultants that can help a business feel confident in perhaps the MSP that they identify?
Yeah, that's a great question. I think, look, there are a lot of providers out there who have the ability to give that level of consulting to a lot of the SMEs. The misconception from a threat landscape perspective is that it's always the enterprise that's being attacked, where we know that the data tells us that 71% of ransomware is actually targeted at small businesses, right? So then how do you ensure that your small business is being protected as best as possible? And unfortunately, it's often comes down, we talked about this morning, to a dollar conversation, right? Because there's only so much money you've got available, but it's understanding, I guess, the crown jewels, where does the data actually live, whether it's on-prem or in cloud, and then having the right level of control. So choosing the right partner that's got an industry experience and knowledge around the threat landscape to be able to then help you navigate through those day-to-day challenges.
Any other questions? Or sorry, I'm blinded by the lights. I can't see.
Thank you so much. Rhys James from PSC. We're insurance brokers for FinTechs. And one of the topics that's being discussed in the insurance market at the moment is the exclusion of state-based actors and the appropriateness of those exclusions. Could you give us any insight into where the threat actors actually are, both geographically, how much of them, how many are in Australia versus perhaps overseas, and perhaps the type of threat actors that you refer to, whether they are state-based attacks or they're commercial enterprises?
Yeah, sure, I can shed some light on that. So at this point in time, we know that there are in excess of 3,000 organised crime syndicates out there from a threat landscape perspective. So these are threat groups who are funded, state funded, to be able to launch an attack. 60% of those attacks do actually originate from the United States. Right? And then you have a certain percentage throughout the Asia Pacific region, throughout APAC, and as far as Australia is concerned, it's only 1.2% of those attackers who are actually based in Australia, launching an attack from Australia. Having said that, though, it is a global threat landscape. It doesn't really matter whether you're in Australia, you're in Hobart, or you're in Amsterdam. The threat is very real, so it's something to keep mindful of. But with respect to the threat actors, and they're constantly evolving. There are lots of organisations out there who monitor the activities of those threat actors and the types of activities that they actually carry out. So that's just the top end of those threat actors. You also have now other hackers who are perhaps inexperienced, because ransomware, for example, and I keep picking on ransomware, it's become very commoditized. You have a credit card that you've purchased on the dark web that gives you access to a whole bunch of different tools to launch an attack on any organization, right? So, and there's certainly a lot more, of those threats that are out there in the wild that we're certainly not aware of.
Thank you. I think we've probably run out of time today. Thanks so much for joining us, and thanks to our panel. We will be around for a little bit longer if you've got any burning cybersecurity questions, make use of our wonderful experts here today. Thank you.
Thank you.
Thanks. Thank you.
Thank you.
All right, we'll move right along into our next panel. Do we have the speakers for our insurance panel here? There they are. So our next panel is all about embedded insurance. And I'm very excited to hear about how embedded insurance is going to solve my problem from having to think about insurance on a Saturday morning, and it's all going to be integrated and amazing and easy. And on our panel, we have Nigel Fellows-Freeman from Canopy Cover, Danny Robson from Yaris Technologies, Bill Angelidis from Day by Day, and moderating we have Simone Dossiter from Insurtech Australia. Welcome to our panel.
Great, thank you. So thanks so much. I want to say thank you to FinTech Australia for having us here today. I'm the CEO of Insurtech Australia, and it's great to be able to talk about embedded insurance. So what we're going to cover is really this hot topic globally about embedded insurance and explore a bit about what does it mean and what's its potential to transform the insurance sector, which we all as consumers want to happen. And we're also going to talk a bit about blockchain and how that fits into the landscape and really explore the role of data and how it brings better transparency and what it means for the all-important claims time. So I'm going to ask the panel to introduce themselves and their companies because they do a much better job than I will, and I'll kick off with Nigel.
Thanks, Simone. Thanks for the opportunity. So, my name is Nigel Fellows-Freeman. I'm the founder and CEO of Canopy. Canopy is an insurance as a service platform that's kind of building the operating system for embedded insurance. And what does that mean? Building the middleware that enables any kind of insurer in the world to enable any digital platform to offer an embedded service to their customers, and so protect their customers where and when they need it.
Thank you, guys. Bill Angelidis, CEO and founder of Day by Day. Day by Day is a Web3 end-to-end insurance platform built here in Melbourne and exclusively on the blockchain. So we're trying to give an option that you can do and use and get insurance on blockchain for real-world assets.
Thank you. My name is Danny Robson. I'm head of product at Yaris Technologies for an Insurtech enterprise system. I'm not a CEO and founder. I've been in insurance for over a decade now, and if you'd asked me when I was 16 years of age if this was my future career, I would have said absolutely not. But I love just the breadth of opportunity and the sheer volume of issues there are to solve in insurance, which is why I'm still here.
Great. So a great panel here. So I was going to kick off with Nigel really to help explain what embedded insurance is. How is it different to FinTech, which is more focused on these sort of embedded payments? And how is it different for those that are in the insurance industry? How is this different from Affinity or White Label, which has been around for a long time?
Yeah, I think there's actually a lot of similarities to kind of embedded finance, actually. I think in terms of, the similarities in terms of how it's actioned, I think is very, very similar. I think in terms of embedded insurance itself, in terms of describing it, I was actually on a roundtable with one of the leaders in the space, a guy called Simon Torrance, a few days ago, and I'm going to steal his lines. I thought it was really apt, and that was embedded insurance is more and better protection baked into the everyday lives of everyone, and maybe breaking that down a little bit in terms of more and better protection. So rather than a single product, having kind of multiple products in terms of more protection and a better protection. So rather than just taking a product that exists today and delivering it to you digitally, actually, how can you change the product construct? How can you actually deliver the nuanced product to the customer where and when they need it? And then think in terms of baked into everyday life. So it needs to be seamlessly integrated into the services and products that you use every day. And so rather than insurance being a disparate service that you have to go to and find, it being embedded inside the services and platforms that you use every day. And then finally, that last piece being kind of accessible to everyone. I think there's a really big kind of noble play here with embedded insurance, and that is that the protection gap is really widening, and so the gap between protection that people have and the people that's required is getting bigger and bigger. I think in 2020 there was $380 billion worth of claims, and only $70 billion worth was covered. And so it gives you a sense of the coverage gap that exists in the world today. And so I think there's some really great examples in the world of how kind of accessible to everyone is coming to bear in this embedded space. And Alipay is doing a great job in Asia, actually. They obviously kind of have a huge amount of services that are offered through Alipay. And they've delivered a health insurance product. And so they identified that there was an enormous kind of lower and middle class in China that didn't have access or couldn't afford health insurance, which made them massively exposed. And Alipay had a huge amount of data and information on all of these customers, lots and lots of thousands of data points. And so we're able to kind of innovate and say, actually, we can deliver a micro health insurance product, deliver inside of Alipay using the data that we know, and kind of gave access. And I think got over 100 million customers already, and it's only a pretty new service. And so really kind of brings to bear how embedded insurance kind of makes insurance accessible to everyone. That's a really nice kind of real world example of how that's being delivered.
Great, thank you. I think everyone's a bit more enlightened onto what we're talking about. Danny, when we talked earlier, you really explored just how big this opportunity is, and I guess what's your view, I guess, as a consumer and from where you sit in that insurance value chain on the opportunity from embedded.
Absolutely, and I concur with what Nigel is saying. You know, it's about the simple product at the right time, at the right place for the right person, and that seems to be in that purchasing journey. You know, sometimes they're making their most invaluable asset commitments, and they want to know that they're protected for that. So as I was doing some research for the opportunity in embedded insurance, this might actually be my nest egg, and I might jump ship now. So in US alone, it's a 10% percentage of that general insurance space, and then here in Australia we're actually aiming to get just over 20% by 2029. We're all numbers people, so it's a huge market opportunity, and I guess it's a $72 billion market as well. So general insurance really has to jump quite a bit to get to that embedded insurance space. And you talk a bit about those challenges that we have to get there. Well, we've absolutely got technological challenges, large legacy systems. They take time. You know, you have to walk before you can run with a lot of these changes. It's a change in consumer habits. It's a change in the way that we manage our business processes. It's a change in the way that we manage our marketing and sales and distribution and everything. And we've gone through this huge reform to change the way that we buy, sell, handle claims from an insurance point of view, and to think that in 7 years' time that this is going to flip it on its head and completely change the way that we do it. It is a huge opportunity, I feel.
Yeah, 7 years is going to fly by, I think. Bill, how does blockchain, how does Web3 fit into all this? Is it going to support this model, or is it going to disrupt it?
Good question. Good question. I mean, I agreed with Nigel and Danny yourself as well, but I think blockchain is going to give us tools and infrastructure to add to the transparency and to the things that give us the lack of trust that we have in insurance offerings, insurance products. And I think we're building on blockchain for that reason, to be able to transact and understand what you're getting into when you're buying a policy, and what the claims process is going to be, and what the requirements on you are in terms of delivering, processing a claim. And if you make it transparent, then I'm going to say it's going to add. Now, whether we can do the half blockchain solution and legacy systems combination and call it true decentralization, I'm not sure. But if you go down and you believe in decentralization and the ability to transact almost peer-to-peer, in a sense, then I think it'll add to it and disrupt it.
Interesting. There's a whole sort of regulatory world that we live in insurance, and particularly around the sales journey. That's been sort of a big topic for insurers and insurtechs for the last few years. And the anti-hawking regulations and the requirements around that. Is that a restriction? Is it an opportunity? What do we think about that? And I guess views of Australia as against other markets. Any jump in on?
I've had a direct example. So when we started our journey in terms of day by day, and we wrote our white paper and our business plans, got all that together, we started our development and then reached out to APRA and said, we're building something here that we think you should have a look at. And this was in the first year of the pandemic, so almost 2 years ago, I suppose. And they came through and we presented and we showed them what we think where we think we're going to end up from a development perspective and our roadmap. They shook their heads. They said, well done, keep going. We can't help you. We can't advise you, and we don't know what to tell you. So I said, does that mean that in 3 years' time you're going to come lock me up when you finally get to catch up? And they said, no, regulations will come out and we'll understand more about this whole industry, and it'll be forward-looking, not backward-looking. So you might need to adjust some things along the way, but no. So at that point in time, there was not enough information, and I'll say knowledge, in the regulator to be able to advise what to do and not do.
Yeah, I think to add to that, I think we need to acknowledge that exactly that, which is generally technology and innovation runs ahead of regulation. And so just acknowledging that and knowing that there may be changes ahead is something important. But I think to the point of how does embedded differentiate or maybe improve that kind of anti-hawking, etc. And I actually think it's one of the solves. And what I mean by that is, I think the opportunity to engage with regulators and engage with the folks that are setting kind of those frameworks up is to say, actually, we're looking to try and do the right thing for the customer. And so we're looking to try and personalize and give the right product to the right customer when they need it, versus trying to kind of force a product that's not required for the customer in a different scenario where it's not really contextual. I think that's kind of really where it kind of falls down. And so I actually think that it's potentially a key to unlock the regulator and work very closely with them in terms of being able to use data, being able to kind of personalize it in terms of N=1 and deliver it to the customer where they need it. And so I think it could be a solve, but you need to work closely with regulators on it.
Danny?
There's this general perception out there, isn't it, that risk and compliance is the naughty team, they're the red tape, they're the restrictors of fun police. But I think when you go back to the intent of risk and compliance and any of the regulations and obligations out there, the intent is often in favour of the customer and the business and finding a fair and mutual ground. As someone that led a lot of the organisational change at one of SA's insurance companies for this latest Haynes Royal Commission, that target market determination piece and being able to identify you selling the product to the right person at the right time, and anti-hawking, which is another piece that Nigel touched on. You would not believe how bloody hard it was to provide the evidence that the product was actually suitable for the person, and it shouldn't be that hard, but that's where I feel like embedded insurance is actually an enabler in this space, because the data is right there at the point of engagement. It's going to tell you whether or not and give you that immediate feedback as to whether or not it's the right fit for the person at the right time.
Yeah, great. I mean, I think that's a great sell there. We're talking about sort of technology change and particularly sort of working with the incumbents, and how, a lot of these embedded models are partnering with the underwriter and then looking to then sell to the end customer. How hard is that in terms of working with them and getting them embedded in this story? Nigel?
The short answer.
The true answer.
The true answer. True answer is really hard. And I say in terms of really hard, I think it's really hard just because there's lots of legacy. It's a very complex space. The insurance market is a complex space, just like the financial services space is. And so I think in terms of the short answer is yes, it's difficult. But I think then kind of breaking it down a little bit and thinking about it on both the supply side and the demand side. And so what I mean by that is, when we think about the demand side, is the digital platform, the company that's trying to kind of deliver that embedded service to their customer that they currently have. And they are really kind of pushing forward and forcing incumbents to deliver a service to them, because they have the scale, the breadth, the technologies to be able to do it. And Alipay is a really nice example of that. That's the demand side forcing the insurers to catch up and deliver a service to them. So I think they're forcing from top down. But then on the supply side, in terms of incumbents being able to get there, I think there's kind of three core things that make it difficult for them and difficult for people to kind of interact. And it's probably people, process, and technology. And I think probably the culture of the organizations is looking after the current business versus kind of maybe looking to the future, and often maybe not having a strategy in place to think about how it changes over the next kind of circa 10 years. And the final piece is obviously the obvious one, which is technology and the amount of, incumbent insurance that you'll speak to that are still on green writing and black screens and like tech that was built from the 60s and 70s. Your policies that you'll buy today, online even, really they just kind of forced the kind of digital form online, and that's still backed off the old systems with a layer over the top to make it accessible. And so then when you think about that, the difficulty for them and the cost for them to spend 18 months, tens of millions of dollars to give you a digital journey makes it really hard. And that kind of makes the space where we kind of sit personally is that enablement piece in terms of how can you allow those folks to get to market quicker at a much cheaper price and deliver a better service, I think is one of the unlockers. But I think these guys have got big digital transform programs in place that will help them over the next 10 years. But in the short term, they need to partner to get there.
Definitely. And Bill, in your discussions with insurers, I mean, a couple of there was the big move a while ago from the big reinsurers to look at blockchain, and it's kind of fallen away. What has been your experience in?
This stuff worries me because I think what we're trying to do is merge two worlds. And it's a little bit like the DeFi and the finance industry, banking and so forth. I don't think they've connected. In my experience, we talk about it and we have some examples where they have tried, but the decentralized finance stands on the left, banking traditional stands on the right, and we've got the same thing now happening with what we've called Insurify or Insurtech in the blockchain space and insurance companies. Now, insurance companies will use blockchain type of solutions to improve claims processing, to improve and automate with AI and machine learning and all that sort of stuff. But that's not taking it to the Insurify and DeFi equivalent in the banking space, where you give the power to the people and you customize and you personalize. Imagine having the ability to personalize your insurance for the period you want to the assets that you want to cover for the exact event, and getting a premium for that on the go. That's pretty powerful. But I'm not seeing that coming out, and I don't know what the incentive is. Are insurance companies losing money?
It depends on the year and the cat season and everything else, isn't it? But yeah, I guess what is the incentive and the hurdles, and by definition, insurers are big companies doing lots of things, and there's a reason that they move slowly because you want them to be there at the time of claim.
Yeah, I think on that, just to add to that, I think the only folks I've seen doing it is a 190-year-old insurer who renamed to Wakam, and they're the only folks I've seen who do kind of doing a bunch on blockchain, and all of their policy admin, all of their policy systems on the blockchain. They're the only folks I've seen doing something in that space.
Yeah, I've heard of them, but they're still doing their back office the traditional way by using blockchain to enable things, right? I'm talking about being on a public infrastructure, having public transactions, having the flexibility. Why shouldn't all of us have the option of investing in underwriting? My self-managed super fund is happy to put some in, and yours might as well. And why don't we get that flexibility? Why can't we be owners of insurance policies that are personal assets earning income when they're used? And I've done a bit of a sales pitch there because that's what we're building day by day, right? So, and it's all Web3 based, which also has this something we haven't touched on, which is data sovereignty, right? So you want to be able to control your data. So a broker or an insurance company can't give it out to third parties for other reasons, from the ATO to your retailer, right? Whatever it may be. So if you're controlling your own data, then you get that power back. So if you haven't noticed, I like the whole decentralization stuff.
Danny, so you've got lots of experience working with insurers, at Yaris and previously. I guess what's your view on that sort of technology and data piece, and how we can move some of that faster, maybe?
Yeah, look, I see we have made movement over the last decade. We're seeing a lot more API-enabled systems. They get it. The people get it. The processes are starting to move towards that direction, but the technology piece is still, it's an environment where everyone is very risk-adverse. And, when things go wrong, they bloody go wrong. So being able to prepare for that and prepare for every single scenario, particularly in this volatile space of still learning what it means for us in this new regulatory space, because as Bill mentioned, it's more about moving forward now. We've implemented a lot of what we think was the right thing to do, and now we're learning what we still need to improve on. And that's going to be a never-ending journey for a little while. So we are seeing slow incremental changes. I think starting with the people is probably the most pivotal. If the people get it, eventually they're going to come together, the right partnerships will come together, and the technology is eventually going to find its way. But that's the nature of the beast in the industry we work in, and technology becomes more and more complex. The more people that are involved, the more risk that is involved, and the more that the ecosystem has grown. And what I mean by that is the more systems that are connected.
We talked about data before, and we have some discussions in the previous panel about the sort of consumer data right and open banking and open insurance. Is that going to be a key to unlock things? What are kind of views around that and the potential for the insurance and for each of your businesses, I guess? You want to?
I think I touched on it before. I mean, I think the whole data thing, and we saw the cyber presentation earlier, is really important. So minimising where my data is in terms of different databases in different companies that have the ability to share it without asking, I think is something that we should seriously consider. And the whole Facebook, metaverse, meta stuff and all that, that's really what it is, guys, right? So it's coming. And I don't see insurance companies with legacy systems being able to manage that. Now, there's lots that I don't know.
Nigel?
Yeah, I think data insurance is a data business, really, in terms of fundamentally, like kind of how you price risk is a bunch of data points and a bunch of information that helps you price the risk. And so I think data sits at the fundamental core of an insurance product. And when you think about embedded, and you think about any of those kind of those services that there's trying to move towards, I think kind of sharing of data and information helps on both sides in terms of customer journey as well as and user experience, as well as kind of underwriting and pricing risk. And I think there's a risk in terms of having access to lots of information and then being able to personalize or kind of not price risks that insurers don't want to write. And that's kind of looking at it half empty, I think. But I think the half full version is kind of how can you kind of use the information to provide the right product to the customer. And a kind of nice, maybe real world example of that, I'm sure we've all kind of got, or some of us have got kind of home loans and gone through that home loan experience, and kind of open banking and CDR has been kind of enabling that kind of finance component in terms of making that kind of loan experience much more simple, shared information to help you kind of get there, write the home loan and the experience be better. And today, in terms of how does insurance feed into that, you get your pre-approval and then you've got 90 days to run away and try and find a COI and give the property insurance back to your kind of broker or your bank to be able to get to settlement. And I guess an example of how kind of insurance can feed into that data piece is how can the insurance kind of transaction be part of the home loan process? All the information's there, you've already been shared it. And so wouldn't it be great if kind of pre-approval, you've got your insurance document, you've got your COI, and you can go straight through to settlement. And that's kind of a product that we've got in market today. And I guess that's a little example of how like customer experience matched with data, matched with CDR really can transform the customer experience. And I suppose just to add to that, and this maybe kind of punches into a little bit into the claim side, and that is kind of we're seeing a bunch of the refinance stuff that people have refinanced 2, 3, 4 times, and their replacement value on their property is 20% of what it should be because it hasn't been revalued in their insurance documents for 10 years. And so when they go to claims time, all of a sudden the house burns down and they've got 20% of what the coverage they should have. And so I think the sharing of data allows the kind of the protection to be kind of correctly kind of matched to the risk, and therefore kind of improves claims time. And I think that kind of probably speaks to a bunch of the stuff that you look at, Danny.
Yeah, and look, unfortunately, a lot of the changes that actually came in the last year or so, we're trying to mitigate things exactly like you've just described. And by ticking the compliance box, a little statement on the back page of your PDS that says, remember to check your renewal and make sure your sum insured is appropriate to what your house is worth. People don't read that bloody thing. So it really solved some of those challenges. And Rachel gave us a beautiful example as a consumer. She's spending Saturday morning trawling through so many opportunities out there to find some cover. And that's assuming she understands the risk that she's at. And she does understand she's got a risk she needs to insure. What about the people that haven't even thought about it or don't even care about it? When they're taking out, let's say, a car insurance policy, they're buying a new car. They're taking out a loan for a brand new car. We should be able to provide the data that we have as an insurance company and as a claim software platform to say, did you know if this car is written off, you actually can't replace it for another 12 months at least because it's coming from overseas? If you've got minor damage, it might be in a repair shop for 6 months because they can't get the parts for it. These are just some of the examples that are happening in our economy today, and it's setting the expectations for these people that need to insure their risks. And they're getting into that policy with the evidence that they need to know and appreciate and make an educated decision, rather than being surprised later on. You know, they thought they've bought this whiz bang car and they've got this whiz bang insurance policy with all these fancy little stickers and things to put on their laptops. But at the end of the day, it's that policy that you don't really need, or don't really want rather, but everyone needs it. And then you use it and you've got all these surprises in terms of poor service quality, delays in the claim. You're actually not getting your bang for buck, and it's not the financial gap that you needed to cover. So there's all these things that we actually know as insurers, and we're not passing them on. And perhaps there's a little bit of reluctance because we get into this space of, you know, providing recommendations where we don't really feel comfortable in doing so, and it's legal territory that's a bit ugly. But you go back to that consumer experience, and it's really that bloody simple, isn't it? It's providing the facts and getting them to make an educated decision themselves at the time of making their investment.
I think to that, like car example's got a nice. Obviously, we all know Tesla, and Tesla have got their own insurance brand, and so they kind of sell insurance embedded inside their car, and so they can say they got the dual version of your car driving around, and they know how you drive, how fast you drive, how fast you brake, all of those things in terms of telemetrics, and so can ensure that risk for you. Can see when a crash happens, can provide all the claim service up front. And so there's a bunch happening in terms of how. I guess embedded doesn't just think about the acquisition component, which is upfront when you buy the policy or when you kind of get the insurance on the risk, but actually kind of how can there be prevention, how can it improve claims, and so really it's kind of part of the service or the platform that you're interacting with, versus being kind of ancillary. I think that really kind of sits at the core of how you can kind of transform the proposition.
Some great examples there. I think everyone's got a much better picture of what it could look like. I think we're almost coming towards time, but I wanted to see, was there any kind of questions for the audience? I've got one big hand up there. Yeah. He's running around.
Thank you. Thanks to the panel and Simone. My name is Sander. I'm the founder of Intersekt, a Singapore-based startup moving into Australia. Embedded insurance works really, really well. The example I like best is if I go to Singtel and I buy my roaming data, that travel insurance is just included. It's just there. That works, but only works if you can manage the costs associated to that. In a Web3 environment where I own my own data, and I love to do it in smart contract firms like we're building ourselves, how do you guys manage costs?
How do you manage costs in terms of?
Making embedded insurance manageable in that way, so it's scalable.
Making it manageable in Web3 with smart contracts,
Yeah, by keeping your costs down, right? If you want to include this automatically, you need to make sure that if I include my embedded insurance in simple and short-term service contracts, for example, the actual execution costs, the cost of creating the contracts, executing these contracts needs to be low. If I want to add it into the blockchain, my costs for adding it into the chain should be manageable. How do you guys manage that?
Well, I'm not sure what you mean by if it's based on a smart contract, yes, and the rules are defined at the point from not only what you're covered for, but the claims process and all the ancillary stuff that go with it at the front end. That's a one transaction on the blockchain until you transact again against that smart contract. So those things can be easily defined at the front end and implemented in mass. So I'm not sure why you're saying manager, because the back office isn't what the normal back office is today in an insurance company, right? So you don't have someone processing it. You don't have someone doing the data entry. You don't have someone doing the spreadsheet to say, look, he's extending by a day and so forth, right? So our business is called Day by Day because the vision is to be able to adjust the premium every day. Yeah, as you add assets to your house, or you add assets to or additional travel time by kilometre if you want to do car insurance and so forth, your premium adjusts, right?
I think that's a great answer, Bill. Thank you.
Any views? Any other questions? Otherwise, I'm going to ask each of the panel really to give us a bit of a vision for the future. Where do you want to see it going? Where do you want to see insurance in this sort of ideal world? And what can we do to support sort of insurtechs, which I believe are going to help that whole process happen. So maybe I'll start with you, Danny.
Yeah, absolutely. We've talked about some of those technological constraints, and we are moving in the direction that we need to. But I think some of those startups or smaller organizations absolutely have the upper hand at this point. The incumbents will need to get to a position where they need to either keep up or overtake and move pretty quickly. And I think we'll see that fairly shortly in the next few years.
My vision is pretty simple. I want to be able to insure what I want, for how long I want, when I want, and get it on the go.
Control back to you. Control back to you from the insurer.
I think embedded insurance has a pretty noble vision. I mentioned it right at the top, which was that kind of embedded insurance kind of giving more and better protection baked into everybody's like everyday lives, and it made it more accessible for everyone. I think that kind of noble cause of closing the protection gap and allowing kind of everybody to be protected where and when they need it, I think is a pretty kind of strong kind of reason to get up every day, and a pretty strong reason to think about what the world could look like in 10 years' time, that kind of people that don't currently have access to the products that they need do have access to it, and we're all each individually protected for the things we need to be protected for, and that kind of done in a beautifully seamless way, and it moves away from being a purchase that is grudge and that no one likes to think about, but actually is just seamlessly integrated on our everyday lives. I think that will be and with that, then it protects us at claim time. And so I think that's the kind of vision for me, and I guess the vision for kind of why we're trying to do what we do.
Beautiful insurance. Yeah, that's what we want. I want to really thank the panel. I hope it was a really useful discussion. I'm sure they're all around. I'm sure they would love to tell you more and meet you all over the next period. So thank you again for everybody.
Thank you.
Thank you very much. Now we have lunchtime, so feel free to head on out into the main area, and we'll be back at 1 p.m. for our next session.
Did you know